This conference will now be recorded.
Hi, I'm Patrick Reed from the Adams Principle. We've got a great show for you today. No particular themes other than another rubbish week on FX, especially as we're getting some conflicting signals. But I don't know what I'd do without Beat. Thank you for helping me out. I'm clueless. I'm glad you're here to set the record straight because I don't know what I'm talking about. Thank you.
For that. Thanks.
Oh, brilliant. So, I thought it was just me, but I think, I spoke to a few guys out there and it's just tough, and it just gets even tougher. There's no conviction, and trying to get your teeth into stories hasn't really changed since there's a lack of everything. So I'm just in general terms, we spoke a bit offline, but in general terms, just as you were really, there's nothing really that's changed other than a rubbish FX market.
Yeah, no, you're absolutely right there. No, let's say we sort of, I don't want to jump the gun about the green shoots in China. I mean, it probably we both knew last, when we done our session last Sunday, after the PMI in China, that risk is going to rally. So that was probably a no-brainer. We had a bit of double up on this Beijing PMI on, I think Tuesday it was, which extended risk, definitely risk on the equity side, not so much on FX. I mean, I was nervous on Monday when Canada yen traded up at 83, 80, 85, which is the key level in Canada yen. Aussie yen is still quite a bit away. Well, having said that, maybe 0.5% away from that key level or the old highs. So really, it's a kind of cautious risk on without actually anyone really buying risk in a big way. I think the market is cautious and not trusting the equity market. I think the equity market, is just utter stupid. You have seen my clip with Investing Channel, and if you just look at the German data, German graphs versus DAX, I mean, come on, it just doesn't make any sense. Reality is the market is always right, so we have to be careful. I'm still betting on that I'm gonna be right, that the stock market is wrong. But so we have three markets, of which two kind of are aligned. Bond markets and FX market, I feel, are aligned. We talk offline about it. So we have no real divergence in FX. We get rubbish data here, we got rubbish data there, we have dovish central banks everywhere. So that FX can't move a lot in dollar terms makes a lot of sense. There's no divergence between the Fed and ECB. There's no divergence between the Fed, RBA, RBNZ, you name it. So it kind of makes sense, even though it's hard to admit it. There is no trade in the dollar that is outside the normal range because there is no divergence whatsoever. In terms of risk, if you look at equity market, risk should have rallied a lot more. A lot more. If you're just, saying, everything is equal, then all the yen crosses have not rallied really, even though if you look on the chart, they kind of look like they rallied. But in the size of what we've seen, where the Dow did break out, where the Dow has closed, risk hasn't really rallied. So now, what does it tell us? It tells us, I think, that the market is cautious. They are not understanding what's going on the equity side. And as we both know, the market is so fickle that if stocks suddenly will turn down, risk is going to be a lot lower very quickly. So no one really wants to buy this level of risk, which in itself, as long as the stocks do not sell off, means like there's a risk we just keep on grinding higher in risk FX, Aussie yen, Canada yen, dollar yen, euro yen, all the usuals. And just grind higher, and higher, slowly. But, if you short risk, at some point you're going to look at it and go like, you know what, it's not a lot of fun, is it? Right now, because we held all the levels I wanted to hold, I'm fine. So I'm still relaxed. Euro yen always underperforms any upside in risk. has done so in the last 5-6 months. If you remember October, November last year, we had massive stock rallies. Euro yen didn't really rally. We had massive sell-offs. Euro yen didn't really sell off, except later in December. So kind of Euro yen is in a funny kind of way shape anyway. What's the conclusion? I don't know. Conclusion is that I think from all the normal things that I'm looking at in a normal year, the solution has to be that stocks are turning down, because we have a bond market that is flashing alarm, or at least worry. Yes, the bond market is probably overdone, when it sort of exploded. So yes, there was a bit of panic, probably a bit of overreaction in the bond market, but the overall direction of the bond market is correct. And I'm still of the same view that, at this point in the cycle, lower yields is not bullish equities. This time, lower yields is actually, wait a minute, danger, right? I still absolutely believe that the ECB has no bullets. Yes, they have like these tactical, blah, 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 TLTRO, that can maybe throw a few other bones to the market. But in reality, even if they will say that, oh, we restart QE, who cares? We have a 2 trillion euro, balance sheet. So whether that's 2.1, 2, who cares? I don't think it's enough this time. I don't think we can repeat the, like a Draghi where, whatever it takes. I think we way past that point. So that's even more so that the market should be a little bit more concerned. We have a lot of stories coming up, potentially in the next 1 or 2 months. European election is going to be a horror show. It's going to be so interesting to watch. We both were blogging about Italy over the weekend. I cannot believe the market is ignoring some really hard, facts. Suddenly, this 2.3% GDP, deficit to GDP is coming back. We just downgraded Italian GDP from 1% to 0.1.
Yeah.
Now, and on top of it, the government wants to steal the gold from the Bank of Italy because I think it belongs to the Italian people. I mean, come on. This is just all. BTPs didn't blink on Friday. Let's see if they blink this week. So this week,
we're below 400, or
to be honest, it's 10-year BTP is 2.5%. Before we're not getting close to 3%, it's not even worth to talk about. It's just not, hasn't moved. But it's going to be one of my focuses for start of next week, because there is absolutely no hard data out next week. The only thing we have is ECB, which, given they have been dovish 2 meetings in a row, I think this meeting should be about buying time, right? The minutes from the last meeting did show that they still kind of confident that this is all just temporary and that growth turn around. So I think everyone who expects a new wave in the dovishness maybe gets a bit disappointed. Germany, the latest data has consolidated a little bit. So we had horrible, the factory orders, but we have better, I think some other data that was slightly better. So, there might be some hope that, if they wait a month or so, maybe it gets a bit of a clear picture. So I don't think we're going to get much from ECB. The only highlight potentially might be Brexit next week. The rest, it's going to be another boring week in FX, unless, like we said, we get a trade deal suddenly with US, China, we get some whatever news from Brexit, or if BTP start to move and actually start to highlight that we yet again get a repeat of what we had last year, where the Italian situation suddenly led to a lower euro yen, euro Swiss, euro dollar as a pressure they build on BTPs. Let's not forget, Italy is just really the problem for Europe. We don't even want to talk France, but Italy with its debt situation, not growing at all. And that's why I say, that the EU election in May is going to be key, because we probably going to get all these kind of, funny parties. So the shape of the European Parliament could look completely different afterwards. And I think Italy had always criticized, partially, in some areas they weren't wrong, that maybe this whole, cutting back after the crisis was just the wrong answer. In terms of austerity was the wrong answer. And if you compare what Europe has done versus the US, it's even clear that austerity was the wrong answer in 2008. And Italy is suffering for that. They're just not growing. And the idea could come up again that the straitjacket of the euro, or let's say of Europe as such, is just hindering progress in Italy. Right or wrong, who knows? I don't know. But, this sentiment could come up again. I'm not saying they would shout from the rooftops about leaving the euro, but you know what? Italians sometimes a little bit emotional and not so patient. And if we are zero grower run into a recession in Italy, that's going to be a lot of pressure on the bond market in Italy and in itself on the euro. But again, maybe it's for next week, maybe it's for 23rd of May when we have the election. From a pure core direction, I can't see anything next week. The dollar is not going to move outside of whatever ranges we have. So all eyes on equities. So I really, to be honest, I have no explanation for the lack of, the way the market is treating this. I really don't. I've never seen anything like that. The only explanation I have is one thing we talked about many times before. The market has different participants. The market has not the sort of risk takers that would just call BS at some point and say that's wrong, yours. We don't have these people. So the market will just be dislocated until it gives a big bang one day, and then everyone says, oh yeah, we knew it's going to happen. So, in the old days, it's not even old days, but until, 2008 or even afterwards or prior, you still had enough people who would call a move wrong and would put risk on for that. Now, in the algo world, less risk takers, less people that would just have the balls to go against the market. There are less of that around. So maybe we can just drift around or the wrong way for a little bit longer than usual. At the end, like we both always discuss, macro is moving the market. The market will go from A to B. That has not changed. The only thing that has changed is how it goes from A to B. More mean reversions, more maybe bullshit weeks where things just don't add up as they do right now. But eventually it's going to happen. And so that makes it a bit harder as a risk taker. My risk is lower than it usually is, but I have risk off position, short Euro yen, Aussie yen, Canada yen, the usual suspects. Just a little bit less. So I have room to breathe in case of, counter punches or whatever. So you have to manage your risk a little bit more cautiously than, in a normal market.
That's good stuff. Just my observation with the austerity, coming back to that sort of quickly, is the ECB had to sort of do something, and I think it's because of the relationship with Germany and Greece, and unfortunately the Italians, they're just, I think I said on one of my blogs or posts or whatever, their debt is a bit, you call it legacy, or it's a nicer debt, because if you speak to the average Italian, most of them actually probably want to pay tax, whereas in Greece, none of them, they think it's a crime to pay tax. So, there's the big thing, and I think the Germans would be up in arms if the ECB didn't do something, or there wasn't this austerity, because essentially that's the engine. It still will remain that, and they sit in, arguably in some kind of ivory tower, and I'm victim of that for myself. I'm not sort of saying anything bad against the German people. I've done it myself, and rightly or wrongly, see, in the whole Greek crisis, they just saw a country that was spending like a drunken sailor, not realizing, not wanting to pay any kind of tax, and had 2.5 houses. So I can see how that played out.
I see where you're coming from, and I fully understand. But that just shows the problem of, one size fits all, which
Yeah,
is
I know.
just, we knew that in the run up to the convergence in 1999. We knew that once we get a serious recession, this system is going to get tested. The system nearly broke, and it's still sick, right? And it's no one, or let's say the German. I read an article the other day which exactly nails what's going on. And what we discussed many times is that no German politician ever had the guts to tell its people that actually the price to be in the Eurozone is that they're coughing up for the rest, in a sense that they are the sponsors of the union. Well, they have their advantages. Let's not forget, if we had a German mark back in 08 and 2012, 2013, the German mark would have probably rallied about 20-30%, right? Interest rates would be on a complete different level. So, so let's say Germany, except obviously now they're in trouble because of China, but before that, the price they got was an undervalued euro for the last, since 1999, too low interest rates. So really, that's the other side of the coin, which no one is going to accept probably. But on the flip side, it's just, it's almost like it's modern socialism, right? It was always clear that the way that Europe can only work if those that haves give something to the haves-nots. Portugal, Ireland, all these countries had a fabulous time until 2008, thanks to that kind of, the have-nots get a lot of money. And at some point, someone's going to stand up. And that's why the key question is coming now in this European election is, do we get a shift in Germany that the AfD is going to win a lot of votes for the EU Parliament? That'd be the first warning shot for maybe the election 2020 or 2021, the German election. Who is going to make the race from Italy? Is it the Northern League or the Five-Star Alliance? Who do we get it from Spain? So there's a lot of, and then not to forget something we're not talking a lot about is all these Eastern European countries that think that actually the way the EU is set up right now, it's going to fail. They're probably not so wrong. And so we're going to get some funny, people being voted into the EU Parliament from Eastern Europe as well. So there is this kind of, let's say, the only hope I have for Europe is that we get a shock and people start to realize that we have to change. As long as we have people like Juncker in charge that dreams of the United States of Europe just because he, as a sort of crony, Luxembourgian or whatever, wants to be the king of Europe. But no one in Europe wants that, right? So we have moved away from what makes sense. And maybe we need the shock in May to actually, we cannot hit the reset button to go zero everywhere, but at least that people start to understand that, things may have to be done a little bit differently. And that could well be that there's a bit of suffering coming to Europe while this progress or this process happens. But I know we've gone way off the topic here, probably
That's
already
right.
into
We
later.
do that. We tend to do that.
Yeah, but to be honest, this has been one of my 2019 stories, and given that the rest is not properly working, well, we had 3 or 4 attempts where we had some risk sell-off. We could buy back some of our short risk, but really, because nothing is really breaking, it's early April. We have trade talks, China, US, that start to feel like Brexit talks. Every day we feel like we're there, but we're not. So who knows what's going to give first? I don't know. But the core view is unchanged, even though it starts to look a little bit wrong. But in FX terms, we haven't really broken anything that will concern me. Equities, we did. FX, we did not.
Yeah, I mean, even if you're looking at the S&P and stocks in general with some, risk-on moves there, diverging. I was saying offline, it looks like a QE move, bonds being bought, stocks being bought.
The market is doing QE.
Yeah, well, oh my God, what a thought. But yeah, I mean, I believe the bond market. I don't believe the stock market. And The other thing that all of this European election stuff is something that is probably, hopefully, going to be the next story you can sink your teeth into, because at the moment G10 dollar's not moving, as you know. Yen's not moving either, and EM's moving, but not like I want it to, with a risk on story, and that sort of nicely dovetails into the first topic. So this was really interesting because you kind of put me straight on this, which is, you know, I'm learning a lot, and you know, I've never failed to learn something each week. And one of the things that happened last week, and you'll remember this, but our viewers won't, because it's the first time I said it. But basically, we had G10 dollar bid and EM dollar offered, and I thought it was an odd case of risk on dollar bid, right? But you mentioned something about EU EM off, putting pressure on dollar EM, so obviously lifting EM, and that in turn was, you know, so EU Rand, EU Tri, and we then talked about this thing about funding the euro as a replacement for the yen as the funder. So the topic here we've got is euro the great funder, yen still potent. So you know, if we do get follow through this week, then we could be seeing this. What do you reckon, Beat?
Yeah, to be honest, it really was the first time on Friday. I think it's been going on and off for a while, but under the radar. Friday was probably the first time that it got very obvious. We had a bid dollar in G10, we had an offer dollar in EM, as you said. The discussion has come up time and time again that actually, especially now that the ECB kicked the first hike is now, you know, obviously not in 2019. When it's going to be in 2020, who knows? So that means the yen actually just got competition from the euro as a funding currency, where you go like, the market is unsure about the dollar, right? So we have this sort of Fed on hold. You know, some talk about a cut maybe towards year end. Others say, you know what, no, you know, there's still a risk of a high coming, especially if you look at the job data we had. So the dollar question is a very tough one, right? So the dollar, if we just talk really, we talk from 30,000 feet, right? Real macro. Whether the dollar goes up or down 10%, I don't think anyone could really answer that question. What we do know is there's zero risk in a eurozone from a hike. You know, euro maybe is the easier call to have a euro rand or a euro turkey for those that want to be long risk. So you have to worry less about the dollar. And you know what? In terms of real carry, obviously with euro rates versus US rates, you actually get a little bit more carry as well. We could now argue, obviously, if the dollar goes absolutely, you know, rallies like mad, you know, the risk is still that euro rand and euro turkey going to bounce again, because dollar rand is going to move a lot faster than euro dollar can ever move down. But what is still interesting is that the market seems to go like, you know what, we feel less comfortable in talking about it or taking aim at the dollar. We want to take the dollar a little bit out of the equation. And that, again, you know, it's one day, so it's a bit too early to say. But if we see similar to continue next week, the dollar EM or the EM start to react positively to what we see in equity markets, and then we could actually really see that people go like, you know what, we try to neutralize the dollar and buy rand against the euro, buy turkey against the euro, right? Yeah. And I'm surprised, and maybe this is what is behind euro dollar being at the lower end of the range, despite some worries around the dollar, some worries around the Fed or Trump and Fed nominees and blah, 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 blah. That euro just, literally euro cannot really rally. You know, we're not talking about 50 pips. We just talk about the only time euro could rally if something happens to the dollar, which I can't see in the near term either. So that really invites people to use euro as a funder. There is no fundamental reason for euro to rally. There's no real worry from the ECB on rates. So it's really almost a no-brainer that euro will just whether it sells off or not, but at least there is a very limited risk for the euro to rally. Again, the listeners or the viewers, we're not talking about the euro can bounce. Of course, the euro can bounce 50, 80 points. So we're not talking about that. We talk about the risk. Is euro going to go above 115 or is it going to 110? So in theory, you would have to say the chance to go 110 is a lot bigger than 115. There's just zero reason to go to 115 unless something really bad happens to the dollar. But then we know, so it's not going to be a move that surprises us. If the dollar will get hit, it be something that we will be aware of because something massively has changed, and we can't miss that. So for now, it makes sense. The reason why I don't subscribe to it is because I don't trust stocks. So we go back to square one, which means I don't trust stocks. What is funny is, if you remember our discussion we had many, the last many weeks, where EM told me that the risk-on move in G10 is fake.
Yeah.
Now it's happening the other way around. So now I'm sitting here going like, wow, the moves were quite punchy on Friday in dollar rand and some of these other dollar EM, which, as I said, one day, okay, let's just wait. But if dollar yen doesn't bounce Monday, Tuesday, then I have to take it more serious. And suddenly I'm faced with the opposite. EM carry suddenly rallies, right?
Mm-hmm.
And I don't know yet how I'm gonna react to that or gonna think about that. But one thing I will keep an eye on, whether this euro funding story is actually getting a little bit of traction. That doesn't mean the yen funding story goes away. Yen funding story is always here. Mr. and Mrs. Watanabe, from what I read, there's an article on Bloomberg, I think, as well over the weekend, that, there's just from the new fiscal year, there's outflows from Japan yet again.
Yeah, I saw that.
But given that they are actually shifting new capital into carry, it's a very muted reaction in G10. Very, right? At the same time, equities rallied. So in theory, if these outflows started on April 1st with the new fiscal year in Japan, together with rallying equity markets, I would say risk hardly rallied. Aussie yen, the usual suspect hardly rallied. So it's kind of, it's hard. It's really, really difficult. And people out there that struggle, don't worry. Even people that think they know a stuff or two about this, it's very difficult. And I think it's one of the most difficult starts of a new year. And actually, being 1 week into April, I can't almost say start of a year because the year is already 1 quarter old, being in Q2. And it's hard, to be honest. I find it as hard as people that may, understand or are newer to this. But no, it's difficult. It really is.
Bottom line is, if this euro funding story materializes, do you think there will be a significant pressure on the euro crosses, especially euro dollar?
Yeah, the problem with euro dollar is it's just a very complicated pair. Euro dollar, throughout this, since its existence, except for the first 2 years when it really got into the 80s, ever since then we have a lot of sovereign wealth funds that obviously have now euro in their portfolio, which they didn't have in the old days. Every dip in the euro will find some, people like China or Hong Kong or some other players that kind of adjust their basket. They're kind of maybe less, I don't want to say they're not worried about the US or the dollar, but, I just get the sense that, with all that's going on around Trump and with the US and the way the US is treating some of the trading partners, if I'm China or someone and I have some dollar bonds coming off, I might actually just let him go out and buy a few European bonds. I'm not saying this is happening. I mean, part of it is probably happening. I'm not making any political statements here. It's just there's a fine tune of reserves that might just be always find its way a little bit into Europe. Russia is probably another one that is kind of moving away a little bit, not from the dollar. So I'm not shouting for a dollar crisis or people giving up the dollar, but there's just always these sort of light flows going on. If the euro dips to 50, 100 points, you always find some of these people buying euros. So the move down in the euro dollar will be painfully slow. And that's
Yeah.
why I say if a problem occurs in risk, this euro funding story can blow up very quickly because dollar rand's dynamic on the upside is quite different than euro dollar to the downside. So something happens in EM, the whole cross axis is just going to go up a lot. So that's why I'm not so comfortable with the funding story per se to actually expect euro dollar to have a massive drop. No, I don't. I still stick to, sadly, to the other view that with a lack of divergence between the ECB and the Federal Reserve, euro is just going to be in another 3 months range. Maybe we lowered the range a little bit. So instead of, say, whatever, 12 and a half, 14 and a half, maybe it's 11 and a half, 13 and a half, or 10.50, 13.50, whatever it's going to be. I cannot see a big material move in the euro on the downside unless we get a hard Brexit. That's the only time where I see euro will move down very fast. I mean, with very fast, again, we have to put it in perspective. Maybe go 110 or 109. We're not going to go 105. So everyone who waits for parity is maybe it's going to age a lot in the meantime because it's not going to happen. No matter how bearish in euro you are, Europe is just too big of a market these days for those people that balance their huge dollar reserves into a bit more of a basket for the euro just to absolutely disappear. No chance of that. We could as well talk about new and up and coming risks to the dollar around the Fed nominees from Trump, which again is maybe premature, but we have Moore and the other guy, I can't remember his name. Both, from what I read, are not very competent. Some of the views are the same as Trump, and some of their talking is a bit like Trump, which makes me worried.
Maybe they're related. No, sorry.
Yeah, exactly. The one thing I would say is, given the number of Fed members, there is at this point very little worry, even if both would be kind of get through the process of actually entering the Fed, that they will shift the balance of power within the Fed. But we might get a few more noises. Trump still tries to muscle himself into that discussion. Powell will absolutely defend the integrity and the independence of the Fed at all costs. So he might actually, like what we spoke offline quickly, he might actually do something that is against Fed policy or against what they should be doing, just to make a point to the market that the Fed is independent, right? He might just, if the data holds up, he might suddenly talk about rate hikes, just to make sure that the market understands that the reason they went on a pause has nothing to do with pressure from the Fed, from Trump, but it made sense when you had like terrible data abroad. You just hiked rates 8 times. Your financial conditions tightened somewhat with QT. So the Fed, to be honest, we would have paused, and we're not central bankers, because we would have just gone like, common sense is pause. At least wait to see whether the weaker data is arriving in the US or not. So this is no pressure from reacting to pressure from the White House at all. People who believe that, I think it's just they don't know Powell and they don't know the institution of the Federal Reserve. There's just no chance in a million years that they will bow to the pressure from the White House. And as I said, if need being, if Trump, Trump is probably the first president that is so vocal about the Fed that Powell might just do, as I said, something that just to show him, I'm the boss of the Fed as long as I'm in there, and I'm not going to listen to you, and I do what's needed to be done. So whoever thinks otherwise, I think is just on the wrong track. No chance in a million years. But what isn't helpful is this constant, on Friday, yet another go, right? Kudlow and Trump both were like digging into the Fed again. The Trump demanding rate cuts and QE. I mean, come on, just give me a break. But you know what? It's not helpful, right? And like I said to you offline, if you would really be worried about central bank independence, look at Turkey. Then you know what's going to happen to the dollar. right? So there's no chance in a million years. The US needs too much money for their treasuries to actually just even think about risking the independence of the Fed. So it's bollocks. Whoever believes the Fed reacts to pressure, forget it. It's not true. It's not going to happen.
So on that note, I think you mentioned if and when the US macro picture all the fundamentals will change. Let's talk about the US macro picture.
Yeah.
Okay. I mean, I'm still, we're kind of, Q1, we're looking at what, 1% or something?
Yeah.
But that's kind of priced in, I think. I mean, the global picture's looking pretty ropey. NFP is, we're the headline's back, but wages are off. But that's not really important because we've got a dovish Fed.
Yeah.
CPI mix stable. ISMs are the only ones for me that could potentially tank, and bring the others down with it later on when the hard data comes in. No real signs that we've had stratospheric numbers for a long time in the US. No, apart from China creaking, as you know, but still kind of, let's just see. But there were worries in China. Don't get me wrong, absolutely. Europe cratering, as you know, and how much of this or when will this feed into the US data? So, what are your thoughts on that one, mate?
Yeah, to be honest, I mean, I'm amazed that to this point that nothing has sort of really shown up. I mean, it shows obviously up a little bit here and there. We have, if you look at the Citibank surprise index, it's a clear downtrend on that one. So in theory, if you just look at the surprise index itself, but maybe you have to be a bit careful. Yes, we had like a few negative surprises, but the size of them is maybe not as much as you would expect when you look in the global space. So personally, I feel like they're kind of hanging in there almost surprisingly. The one thing I would say which we have to watch, even though we're usually not watching single companies, but this Boeing story
Yeah.
to be watched because
Good.
we talk about $380 billion of orders for this 737, right? Apparently a lot of cancellations going on. They started to cut production a little bit, so slowed it down. It's too early to go panic, but it would have quite I think the overall GDP impact is probably not as big as people would think. I think it's only 0.2 or whatever it's going to be. But if you suddenly talk about data like durable goods or things like that, there could be suddenly quite a gift back. I'm not an expert and I'm not sure how many people really did start to cancel orders for the 737. But don't forget, durable goods is living off. Aircraft is just such a huge impact for durable goods. And so obviously Boeing as a company for the US is very important. And let's be honest here. Things like that, hopefully get solved. But things like this crash and when it's really proven, which it starts to look like that it's a problem from Boeing, things like that can break the neck of a company, right? So, I'm not want to shout cry wolf right now, but it's just when we look into the US economy, there's a few things that we just have to keep an eye on it. It doesn't mean we have to panic, doesn't mean like we have to overreact, but while we wait for the normal data, just see what else is going on. We talked about buybacks in equities as well, right? So we have to continue to look at that. The blackout period so far hasn't really, it almost seems like, business as usual, every dip gets bought.
Yeah.
So in terms of data, we could argue, like we said offline, the US might still be the best of the rest, because the rest is just all looking really bad, So, in FX and what is moving FX, which is the most which is the trade you want to have in FX. You want to buy what you love and you want to sell what you hate. The problem is there's no such trade out there. So you can only actually, sell. Yeah, you can sell what you hate because there's a few out there, but there's very little, that you love. So then we have to go the next level, which is we buy what we kind of like. And I think that's where the dollar slots in. That's why the dollar probably can't explode either, because it just manages to be the best of the rest, which makes it stay bid. But we're not going to see a tremendous dollar rally either, right? Unless, in a month's time or two, the data isn't turning down and we start talking about a Fed hike late 2019 instead of a cut. Let's not forget, they've taken out 19 and left 2020. They cannot hike rates in 2020 because of the election, presidential election. No Fed has ever hiked rates in a US election year. So that means if the Fed is worried that they may have to hike one more time, it got to be 2019. So that would screw the market a little bit, that actually expects cut in late 2019. But that's again a bit further out. So right now, we do the same what the Fed is doing, watch data. And that's actually the nice thing about trading right now. Data move the market on a day-to-day basis, which is actually what we want. It's actually what we need is less forward guidance, more actual reaction of the data, which I think is fabulous. I really like that.
On that note, without Boeing, it could break the neck. And let's just remind ourselves that in February, the Vol complex blowout was one thing that triggered something else, that triggered CTA selling of stocks, which then triggered other stuff. The Apple miss was one thing on iPhones, but it was the link to China, and that caused, as you know, so this Boeing thing could be the net break of Boeing, but it also could be breaking the camel's back, or the straw that broke the camel's back for a wider thing as well.
Yeah, absolutely. Right.
Okay,
so the only reason why I was careful is I don't want to be seen to, I'm not an equity guy. So everyone who's watching, I'm not an equity guy. I'm no expert in aircraft. I'm just thinking out loud. to just make it clear, I'm not calling the end of Boeing, but I'm just saying you got to keep an eye on it.
Well, look, I've seen the news. I mean, it's appalling for Boeing. Let's be clear. They had a problem, and they were supposed to fix it, and they didn't, and more lives were lost. I mean, that's fact. That's in the news.
It's mental.
So it's a massive problem, and lawsuits are going to be coming thick and fast.
Absolutely.
So dollar index. I've got the chart up. Let's have a look, shall we?
Yeah.
Right. So 98 is a nice level. 97.70. We didn't quite make it there, but we're kind of bullish on the daily. But it's all range bound. Just more of the same, I think. What do you reckon, Pete?
Yeah, I no particular view in the dollar index, to be honest. I just don't see, like I said earlier, there's just no angle other than normal rate trading, at least not for next week.
Good stuff. All right. Finally, there's a lot of talk on China, and I want to say, I don't think there's going to be much in this deal, but who am I to know? Lots of people are telling me different. The market thinks there will be a lot more than I think so. And I just want to go over some bullet points about China. Talk of green shoots, that's one thing. Talk of Trump wanting the deal because of the 2020 election, which will make him, he's a stock guy. He wants it so bad. So I don't know what he's prepared to compromise on. The IP issue is massive. But the other things is markets ignoring any bad news, really, any sustained selling of risk, really, and loving good news. Look at the China PMIs were like 0.2 up from the
Yeah.
expectation. Like, and we had some openings on the Monday and Tuesday that were really, buoyant for stocks, and even some yen pairs got lifted, even though they're not fully correlated with broad risk on in stocks. So is it okay? Are we still buying a rumor, or can we sell that fact? What are we doing here, mate?
To be honest, it has been my view all along, and I'm not going to change it, that you do buy the rumor, sell the fact. I think first of all, I think given the time it takes for that deal to be hammered out, shows there's a lot of bumps in that road, which bumps in the road means there'd be some compromise, some stuff would be watered down. There's a few, what they actually, almost should have done is, I think I remember the US made 164 points, back last year when they talked about the trade deal. So 164 points that the US want to be solved. So really that already tells you that, that is not a short-term thing. So what they should have done is broken it up into different clusters of where they want to agree, car tariffs, whatever, agriculture stuff. There's obviously things going to happen there. Reality is that the trade war has added pain to China, but it's not the root cause of the Chinese problem. And so therefore, I do not see that, when the trade deal or the trade war is over, that, China is suddenly recovering like with flying colors. No, it's the problems are deeper and different. Does it help? Yes, it does. Does it turn everything around on a dime? No, it will not. So I think, and that is really, I have never seen in a market that a market is buying a story 288 times, right? Okay, the rallies of late become less to non-existent, but they've been rallying for like months and months. Every time, probably Trump is a bit more quiet because the Dow is 26,300. If the Dow would be 24,800, he would probably be more vocal. But that's the insanity of the market right now. The market usually reacts strongly the first time, still reacts the second time. Let's say even 5 times is a high number to rally on the same story. To rally so many times as you did, I mean, it's a joke. It really is. I cannot, express it any different. So, but we both respect the market. That means I can only really judge whether my view is right or wrong. I want to see the Dow rally, and that's really numbers I've written down, and I'm not kidding. I want to see the Dow rally 500 points on day 1. I want to see it rally 300 points on day 2. That's the first time that I step aside to say, you know what, my whole 2019 outlook on risk and the stocks might be wrong. If I see the Dow rally 200 points on the announcement and finishes flat, I'm going to sell risk until I hit the button until the finger bleed, because that is what I want to see. True failure, a sort of knee-jerk rally and closing lower would be really the sign. So if you ask me the view, yes, I think it is buy a rumor, sell the fact. What will I do in real life is exactly that. I observe the rally. If it rallies strongly and holds, I will be cautious. If it rallies and then starts to fade, I will aggressively load up on short risk. That's how I'm going to be trading it. And I have no doubt that there will be a few things that they will not be able to solve in this trade deal. Because, you're talking about 2 complete different systems. And one thing that the US doesn't understand, Trump doesn't understand, and at some point the market doesn't understand. You have to understand China, the philosophy in China, the mentality of the Chinese. They're not going to bend over backwards. Yes, they want to have a deal because, you know what, it's annoying to have the situation as it goes on. But they will not go out of their way to suddenly change their system to something completely else. Zero chance of that to happen. China came where they are with a certain style. Yes, they got away with it. Now they seem not to get away with it. So in Trump's defense, I still have to say he's done the right thing. How he's done it, questionable. The way he speaks, questionable. But the actual fact that someone had the guts to actually say to the Chinese, listen, you've done strange practices in the last 20, 30 years, and we no longer tolerate that. I think it's gutsy and it's the right thing. How the Chinese will react, they probably done whatever they done because they got away with it. Now someone called it, and now they have to change. But what they're not going to do is change the entire system. So be in China. We're not going to get that. Where they're going to be locking horns, I don't know yet. You mentioned the whole thing around, all the electronics, all the IT stuff, all this intellectual property stuff. That's going to be it's a minefield, and they're not going to solve that very quickly. Whether that means they finally realize we have to break the trade deal up into clips, that would make the most sense, and the market then has something to digest. But I don't think it's rock and roll if we get the trade deal, because it's been going on for too long. It's been going. Stocks already up here anyway for all the hopes and wishes and whatever else. So, but maybe I'm just utterly wrong on stocks. That's possible.
So next week, if I see loads of plasters and bandages on your hands, I'm going to know you've been
short a lot of risk.
You've been doing on those yen pairs, mate.
Yeah.
Right.
Yeah.
So
I'm going to hold my hands up.
I'm going to show your hands next week, and if they've got good plasters on.
Yeah, I promise it. I will.
Brilliant. What a great show we had today. Just before we leave, I want to mention your amazing commentary. It's certainly helped me out, and it's especially in the last couple of weeks. It's just given me loads more questions about my own knowledge, really. And unfortunately for you, Beat, I've been emailing you lots of questions. So,
don't worry.
But it's all amazing stuff, and you come up with some real gems there, great tradable ideas. So do you want to tell us a bit more about that?
Yes. So basically, what Patrick is referring to. So I have a sort of dual thing I do. So I do the 4-hourly and daily charts. In there I will write for every pair, what my position is, what my idea is, what the theme is, what I think, whatever market developments we have, what it means for the currency. I write a piece called My 2 Cents, which is kind of, some of you may have seen it on LinkedIn or Twitter. Just sort of put my broader thoughts out there. And then obviously, I report some of the news, try to put it into context. So I think it's valuable for people that actually already know their stuff, because it's information for those that are in the process of learning. I think it's a great tutorial to start to understand. If you want to play in this market, there's a lot that you have to know, and the more you know, the better you will trade, and that will probably be one of the keys for you to probably master the market, to understand more things, what we're watching. Some stuff we can cover in our session, but there's just so much more that keeps on happening. And Patrick, as you said, there's we can't always know everything, but if you have someone that has a sort of been there, seen it, it helps to explain a few things. So that's what I do. If someone is interested, ping me directly or ping Patrick, and we can have a chat about it. Back over to you.
Thanks very much, Beat. During tonight's show, I've actually noticed another grey hair in my head. So you heard of the saying, there's not enough grey hair in the room. Well, there is when Beat and myself are here. I've literally just noticed it. And that's because we've been doing it quite a few years. And, if you've got any questions, give us a post. We do both blog quite a lot on LinkedIn. Just shoot us some questions, and if you want to know more, just contact Beat or myself, and we'll get you sorted out with something. And what a great show! Have a great week, and just watch that risk. That's it from me. Anything else from you, Beat?
No, that's it. Thanks very much for having me, Patrick.
Thanks, Beat. See you next week.
Great week.
Cheers, mate.
Perfect.